want to bring in U.S. Bank Wealth Management Traditional Investments Group Head, Lisa Erickson, with us this morning. Lisa, great to see you. Thanks so much for joining us.
Thank you.
And of course, we're talking about U.S. Bank Wealth Management at $148 billion. You've got to allocate capital regardless of what's going on. How are you allocating today?
Well, we're still in a risk-on mode, favoring equities across the globe, primarily in the developed markets, both Europe and Japan, as well as the U.S.
And is that because of the backdrop of strong earnings, or is that because of optimism about new policy coming out of Washington at some point?
It really is on the backdrop of the strong earnings and the fundamentals. So when we look both on the top-down basis, we see very positive macro indicators. You've got a nice low inflation environment, a nice low interest rate environment, and when we look at those leading indicators in addition to that, they're all very positive. Also, when you look on a bottom-up basis, you've got really nice company earnings coming through, and the forecasts remain very good for the third quarter.
Lisa, how about emerging markets? There's been a rotation away, and now there's talk of people rotating back to them. What's your thought on emerging markets?
So we're more neutral on emerging market equities, and while there's definitely some positive economic momentum in those markets, it really is a more diverse set of markets. So rather than an across-the-board positive view, we're really believing that you need to pick and choose within that particular area.
Pick and choose countries or pick and choose names?
Both. Both. Be more selective both on the macro front in terms of individual markets as well as individual names.
Lisa, how are you approaching taxes? I'm sure your clients are filling your advisors up with those questions. How are you all pursuing that right now?
Yeah, so definitely we want to keep a close eye on tax reform potential. But in general, with most of our investors being very sensitive to taxes, that's something we on an ongoing basis incorporate into our client portfolios. So trying to minimize those capital gains. I think there may be an upside boost if you continue to see some of the administration come through with policy, but we're not banking on that yet.
You know what I think is really interesting, Dagan, is the fact that now when you talk with market experts like Lisa, the expectation of tax reform is just gravy. It's not the reason to buy stocks. It's just extra gravy if, in fact, it happens. That's not the expectation.
Right, and you saw that thinking really shift, particularly earlier this year, moving into the third quarter, where people realized, wait, the real engine behind the markets, or the engine behind stocks, is the earnings growth, is the every developed global economy firing on all cylinders, where you have this synchronized global growth story going on. But I worry, because I'm a nerd, about longer-term interest rates. So the 10-year Treasury, the yield is still under 2.2%. And you have $20 trillion in debt here. And you're going to have spending just to help with the hurricane relief efforts. With that kind of spending, that kind of level of debt, at what point do treasuries really sell off? I mean, we've been waiting for this to happen for the last 10 years, quite frankly.
Yeah, we do believe that, looking forward over the long term, you're not going to expect the same kind of returns from fixed income assets as you got over the past decade. And we do expect in sometime in the near future, even in December, that the Fed is going to hike those rates back up. So there is reason for caution. That being said, we still are advocating for our clients to remain diversified and not just avoid the fixed income markets. The Fed has done a very good job of singling out the markets and also keeping its fingers on what's going on with the data. And so with all of those factors involved, we're not panicked about what's going on in the fixed income markets, and we still want our clients to have a ballast in their portfolios there.
Real quick on equities, you like technology, financials, any groups? Are you doing it through ETFs or specific names?
Yeah, so two of our favorite sectors are actually technology and consumer discretionary, and we just feel like there's particular names and subsectors within each of those areas that really should benefit from both the top-down and bottom-up trends that you see happening. And so you've got secular trends in terms of how the spending habits are moving, some of the move to services, for example, and cloud computing that should benefit certain companies over others.
Would you buy Oracle ahead of the numbers tonight?
Well, we don't actually comment on specific companies just because of trading the portfolio. Yeah.
Lisa, great to see you.
Thank you so much.
Thank you so much. Lisa Erickson joining us there.